Welcome back, traders and investors. We have Dirk on the line. He is a professional trader and technical analyst. He's been a professional trader at Friczewsky Financial Markets. He provides daily trading signals for many asset classes like stocks, bonds, currencies, indexes, and commodities. And Dirk, you like to use Fibonacci retracements. I do too. How did you learn about the Fibonacci retracements?
Actually, the Fibonacci retracements is the most important tool I use. Just to inform our audience about the trading setups and about my way of trading. Usually I trade forex, so that's the most important topic for me. And besides that, the trades are placed for example, at the future DAX or the FGBL is called, the Eurobond future, and a bit of German single stocks. So that's it from the stock side for me. Most of the time I'm just swimming and dancing into the forex markets.
Okay, so the Fibonacci retracements, I've studied them a little bit myself, and the .382 and the .618. I mean, they're things that I am conscious of, but I've always tend to base a lot of my analysis on the 50% retracement, kind of right in between there. Why don't you explain which ones you look at, which ones you put the most significance on?
I guess you're right with those most important signals you get from the 61.8. And if you are talking about Fibonacci retracements, you should also put your most important way on the long term and on the midterm chart analysis. So I guess it's very important to screen your currency pair. For example, euro, US dollar is the most traded currency pair of the world, the most liquid one. And if you go back to the all-time high and to the low of 118.75, for example, just placing this for a long-term chart technical analysis, and then going into more detailed, into more daily or for our trades, for our chart time frames, you may have a look at the 61.8 and down to 23.6. So these two, in my opinion, are for me and for my setups are the most important turnaround scenarios.
Okay, so will you use those levels as targets? Let's say if a stock has or an instrument has a big sell-off, will you have identified a bottom? Will you use the retracements to you'll get long and then you'll exit at that level, or do you wait? If a stock has a big drop and then it has the .618, then you'll use it to initiate a short position.
Yeah, it's something like a currency pair. For example, the euro dollar is some kind of getting the direction to 61.8 level, and it's getting closer and closer and closer. And you just try to put in your trade to for example, because it's coming from the downside to the upside, testing the 61.8 level, and you're just about to trying a next short because you think it's the next resistance. So it's some kind of a resistance area that way to place in your short. And during you place your short, of course, you should have your own way of thinking about your profit, or even you semi-automatic trading system allows you to put in a take profit signal and a take profit point for you, so you have no trouble and you don't run into a psychological trap after your trade is going your direction. So I guess this is the most important thing, just to have some targets for yourself, and then some possible future targets for the next trade to place. So that's the point, I guess.
And I've noticed also, when looking at the retracements, I mean, I like to put some significance on them, but if I could get some corresponding, let's say you're getting a bounce in a stock, if I could get some corresponding highs or closes at that same level, to me it seems to add some statistical significance. Do you just stick with the straight out fib calculation, or is it, if you see a reinforced by, let's say, a daily high, or does it give you a little bit more confidence in the level?
Yeah, if you're just looking on a 4-hour chart and the candle of the last 4-hour candle already is closed, and it already had built up a high, and so this gives you, of course, a little bit more confidence that you may set up a new short and just to try it. I mean, trading means you just have a one or a second or a third try of your setup, and you try to get confidence with the first or the second setup. If it works, then you just lower your stop, or you just go on the so-called BE, behind entry costs, and so on and so forth. So that is something where chart technical analysis like Fibonacci retracements and other things like trend lines or patterns help you. The rest of it is a little bit more of story, fundamentals, and of course sentiment.
Okay, talk about the sentiment indicators that you follow.
So, for example, if we talk about the forex markets, of course, we got some big brokers around the world who deliver us sentiment indices. You can see how many people are short. You can see how many people are going long, and you see the open interest. Even you see the statistics and from the CFTC every week. All that stuff is built into some kind of sentiment analysis. And if you talk about the stock markets, you get more possibilities. For example, here from Germany, every day some stock markets like Stuttgart or some like Frankfurt, they offer sentiment analysis. And usually, it's really bad for private investors. But usually, private investors are on the wrong side of the market. If they think from the sentiment all goes up, usually the market goes down. So something like a contra indicator.
Talk about like your trading day. I mean, obviously, Europe opens, much earlier than the U.S. markets. Are you up? I guess it would be for that 4 o'clock open, or excuse me, the 4 o'clock open in the equities here. Europe's open a couple hours before that. Do you get cues from the European trading that will help you navigate the U.S. markets?
First of all, I guess the most important market still is the U.S. Okay. And from the German perspective or from the European perspective, if you are in trading a long time ago, started trading a long time ago, you just need to realize that the big direction from the market is still from the U.S. So you may see that when, for example, the 4th of July, you had no trading day, you had a day off, and we simply had no big party behind 14 CET here in Germany. So this is something like you start in the morning here at 9 o'clock CET, so that's where the Xetra opens, and ending at 17:45. So of course you only have 2 or 3 hours where both big markets have the chance to correspond. Besides all that trading which goes over dark pools and other systems from banks or funds.
And what are your favorite U.S. markets to trade?
Pardon?
I said, what particular U.S. markets do you focus on? The S&P futures, the bond futures? What U.S. markets do you focus on?
I guess the most important thing is the S&P 500, and besides that, the Nasdaq Composite, because it's a very big variety. And on top of that, you may have a look at the Russell 2000. There's a big variety of a lot of companies. But the most important index for me is the Standard & Poor's 500.
And so you're trading the actual futures index then, right? You're not just using the cash as an indicator. You're trading the actual futures. Yeah,
in Germany it's very easy. Besides that, if you're a rich guy, you may use the Eurex markets directly and trade futures. But if you're just a private trader, you may use the so-called contract for difference here, and you trade, for example, the Eurobond future or the DAX future, or for example the Standard & Poor's 500 future. All those kind of classes over the contract of difference.
Okay, this S&P futures market's been pretty, pretty much a runaway bull market here for quite some time, and you really haven't had any substantial retracements. I mean, a few 10%, we've gotten near 10% pullbacks, but haven't seen it yet. What's your forecast, short term and long term for the S&P 500 futures?
Well, if you're looking at some kind of investment banks like Goldman Sachs or whatever, I have the feeling that soon the one possibility is, on the one hand, they may widen their ratings and their expectations to the upside. Because, for example, Standard & Poor's 500 2000 goal for year end is almost reached, right? I guess we might run in a bit more trouble into September, November, maybe. I'm not some kind of magician like Merlin. I'm not forecasting something. I'm trading the markets. But anyway, I guess when it's getting nearer and nearer to maybe hike to the first rate hike in the U.S., we may get some trouble, right?
Right. So you're reacting to the market. You're not trying to make predictions. You're reacting to the price action that you get, figuring your retracements, and then trading accordingly. So you're using the fibs and the retracements? Are you using them over several different time frames?
Yeah. Usually it starts from the 4-hour chart and goes over the daily chart.
Okay.
As a private trader, it's not gambling in the end. It's a job. It's trading. You gotta get up in the morning and end up maybe at the evening, or you're ending up at the midday if you have already reached some nice gains and just close down. But in the end, you only have the possibility to anticipate some kind of movement, because you're not quick enough and you don't have the equipment like for example HFTs or other systems have. For example, trading currency markets like euros, dollar, these days have been so boring. Today we only have 20 pips average daily range. That's a minimum range. If you remember 2008, 2009, 2010 levels, we got almost 200 pips, 240 pips daily ranges. I think those days are gone. It's getting really hard and tough to ride the markets. For example, like from the beginning 2014 until today.
Okay.
I guess you got a chance to anticipate some kind of moves, like for example the Kiwi trade. It went up to 88.40s, so close to these all-time highs, and it's something like a move back, and supported by fundamentals.
Okay,
And,
so if
this is
someone,
something you anticipate.
yeah, if someone is, let's say they're just looking in, they're getting interested in trading, and they're looking a lot of different things, a lot of different indicators. There's dozens of them out there. What could you say to them to convince them that Fibonacci sequences and Fibonacci retracements are really are what they should study first when they're trying to figure out how to be a trader?
Well, the chart technical side is one of the most important things, I guess. It's very easy to explain why. Imagine there are out there the forex markets, for example, this is the biggest market. We have a daily liquidity of 5.3 billion, trillion US dollars. That's an amazing amount of money going around the world every day, and besides that, the fact 75 to 80% of those trades are all placed by machines, by algos, HFTs, however you may call them, and all those kind of systems work with Fibonacci's and all the other technical indicators. So you only have one possibility: get into that or leave it. That's it.
Okay, we've had Dirk Friczewsky on the line. He's a professional trader and technical analyst coming to us from Frankfurt, Germany, giving us his take on the market. Dirk, thanks a lot for joining us on Benzinga's pre-market prep, brought to you by Options House. Have a good trading day, and we hope to have you back on again.
Thanks a lot. Thanks for having me on.
Okay.
Bye-bye.
Bye-bye, Dirk.